Welcome to another video. If you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis each and every day on all my platforms. And in today's video, what we will be doing is performing a live analysis in the market. So we will be taking a pair, analyzing it from a technical and order flow perspective. And by taking the combination of the two different analysis, what we will be doing is determining the best zone to be looking for a potential trading opportunity. So I suggest you watch the video until the end because it will be very educational, and if you enjoyed it, make sure you subscribe. Okay, so as I promised yesterday, today we will be making a full breakdown on GBPUSD to see which is the next opportunity for this pair, and as usual I will try to keep the analysis as educational as possible so you can learn which are the most important things to follow in the market. So let's start our analysis on the weekly time frame. Now if you remember, and probably you remember quite well if you follow my analysis on GBPUSD, what did we say last time that we analyzed the pair? We said from this area here, which is a very strong resistance zone, okay, previous support here, now to resistance, we want to see the market make a strong move to the downside to also complete this W formation. And in fact, that is exactly what the market has done. It started a strong move to the downside, and if you were able to capitalize on the wave to the downside, great job. I will publish the link to my previous analysis on GBPUSD in the description of the video, and I suggest you go and check it out. So from here, we wanted to see the market make the move to the downside. So the W formation from a weekly perspective is more than completed. The market currently broke also below the neckline of the formation. So on the weekly, we can quickly understand that everything at the moment has turned to a bearish structure, since the neckline, as we have just seen, is now broken to the downside, and this structure level here was also a very important structure level in the past. In fact, as you can see, it was acting as extremely strong support here against support here, resistance at this area, the market broke it above, retested it here, acted as support, resistance here, and now the market broke it again to the downside. So it's turned resistance at this area, and we can actually expect the market to go and retest the zone, because after a strong level breaks, we definitely expect the market to go and retest it. Let's go down on the daily time frame. What kind of situation we have on the daily? Now, before we analyze this situation that we have from a daily perspective on GBPUSD, let's go and see what we have from a COT perspective, so commitment of traders. What big banks and institutions are currently doing from a GBP perspective, specifically GBPUSD. Why? Because if you check the data for the GBP, the non-commercials for the GBP, what you actually get is the data of the non-commercials, so the biggest speculators in the market on GBPUSD, because don't forget that all currencies on the spot are traded against the USD. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. So what we can see here is that currently we're sitting at minus 15k net positions. What does it mean? It means that we went from the positive 35k that we had here to a negative minus 15k. So we went from having way more longs than shorts from an institutional perspective on GBPUSD, with 76k longs and 40k shorts, all the way down to having 45k shorts and 29k longs, so minus 15k net positions with more shorts than longs. So the completely opposite situation. However, we must also notice that if you look at what happened lately on GBPUSD, in the last reports, a lot of shorts have been closed. We have seen first 10k shorts getting closed, and then another 7k getting closed, and at the same time longs are getting opened. 1.9k longs are getting opened, and another 485 long positions are actually got opened on the GBPUSD. So overall, we have seen a clear transition. However, in the short term, net positions are increasing because shorts are getting closed and longs are getting added. So we can expect in the short term to actually see some bullishness, which brings us to what I want to show you now from a daily perspective on GBPUSD. So let's go back to our chart. Now on the daily time frame, what the market did, this move to the downside, we wanted to see it, right? But what the market did in creating this move to the downside is a complex move, because it's an impulse, a correction, and then another impulse to the downside. Now if a market creates an impulse to the upside and then in creating this retracement creates a retracement inside of it, what it actually does is simply creating an M formation. After an M formation in the market, what do you want to see? You want to see the market go back and test the neckline, aka the previous support, now turn resistance, to complete the pattern. So overall, from a daily perspective, immediately we can expect the market to go and retest the neckline. Now, if you want to really pinpoint the neckline, what you can do is go down to a line chart and you can identify exactly the neckline of the formation. So overall, we want to see the market go and test this previous support. Now turned resistance zone. That is what we want to see the market go and test. What we can also notice is that the market currently in this move to the downside has now approached a very important structure level. Why? Because actually, let's be even more precise, because before starting all this move to the upside, okay, there is one last red candle that the market created, which is this red candle here. Now this zone is a very strong demand area for this market. It was the previous resistance, which is now turned support. So we can expect inside of here to find some strong buying pressure, considering that during this move to the downside, hedge funds have been closing their shorts and opening more longs. So we can expect from here to see the market start a nice move to the upside. So immediately we have everything clear in mind. On the weekly, we have already identified the possibility to go and retest this zone to the upside, which aligns with the neckline of the formation. So on the weekly, we already wanted to see the market make a move to the downside. On the daily time frame, we have the M formation, which we expect the market to complete. We also have our demand area here. And as we have already seen, from a COT perspective, what did we say? We said that during the move to the downside, they were closing their shorts, thousands of shorts, and opening some longs. In fact, net positions increased. So overall, what we can expect from here to see the market make the move to the upside. So in which way we will be approaching GBPUSD with students this trading week? Well, first of all, let's go and see what we have from a 4-hour perspective, because always remember, monthly, weekly, and daily are for direction. The time frame on which you're supposed to be looking for potential trading opportunities is the 4-hour time frame. Why the 4-hour time frame? Because it filters out all the noise of lower time frames and still gives you the possibility to enter with a very high risk to reward if you know from higher time frames and obviously COT data where the market has the higher probability of going. So here on the 4 hours, what we can see is that everything is still pushing to the downside. The market is just pushing lower, lower, and lower. So at the moment, there is no longing opportunity for GBPUSD yet. But obviously, things might change during the trading week, which is exactly what we are waiting for with students. So the way in which we will be approaching this market is we will be monitoring price action on the 4 hours inside of this area, waiting for the market to shift from a bearish market to a bullish market, and only after the market will have shifted from a bearish to a bullish market, then we will add it on watch list and we will be waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with students with a very good risk to reward and very good probabilities for the move to the upside and the completion of this M formation, and obviously retest of the neckline on the weekly. So this is overall how we will be approaching it. If everything will remain like this from a 4-hour perspective, this market will just continue to push to the downside and break the zone. Okay, that is why trading is reactive, not predictive. If on the 4-hour everything will just remain like this, it will be easy to break below the area. So we won't be looking for any opportunity in that case. We first need to see a clear deceleration and buying pressure inside of this area, and only then we will add it on watch list, and we will be waiting for the market to provide to us one of our valid entries. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them with me each and every day. In fact, I give you the market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every question that you have each and every day. So it's a very complete program. I suggest you click the link and you go and check it out, or I will see you in the next video.